Welcome back to Ferocious Education. This is Zed. Today I'm going to be talking about Ashford Hospitality Trust, going with the ticker AHT. I haven't covered this one before, but there's a lot of buzz about it. And today I'm going to be giving you a bit of due diligence onto this one, technical analysis, institutional interest, and everything we know about this one so far. So let's jump right into this one. So AHT, starting off a bit with their portfolio. So you might have heard about more of their names or recent portfolios here. So you're looking into things like Courtyards and also Ashton, Embassy Suites, Hampton Inn, Hilton, Marriott's, the list goes on. Residence Inn as well. So, and also the Sheraton as well. But this one here prominently has locations mainly in the US. And we get to see some of their presentation here. It does highlight some of their more prominent locations, including Marriott Beverly Hills, and the list goes on. So for today here, we're going to be covering a bit more important aspects of this one. One of them is the CFO. The CFO here has around 18 years with Ashford and 21 years in hospitality experience. Now the prominent thing about this one here is 18 years in Ashford, and that counts in the 2007 as well crash, the financial crash. 16 years here for the CEO and president, again, marks almost back to 2007, so they do have experience into diving it or steering into the business in rough times. And so some of the impacts of 2020 related to COVID, of course, is first off is the US RevPAR growth year over year. You're looking into negative 47% on their total sales. And you're looking into changes in occupancies year over year. They had a 32.8% decrease, and average daily rate growth year over year is 23.9% lower. And some of the things that had to happen more off in the quarter 1 2020, quarter 2 2020, and quarter 3, and moving on forward. So for instance, quarter 1 2020 reduced property level staffing by approximately 90%. And the next, suspended operations at 23 hotels with limited operations remaining on the last 93. Significant corporate expenses cuts, suspended common dividends and capital expense project, slashed monthly field expenses, and cut expense or executive compensation. Now on quarter 2, secured forbearance agreement on $123 million of loans, suspended preferred dividends, and suspended principal and interest payments on nearly all property mortgages. In quarter 3, secured forbearance agreement on additional $2.4 billion on loans and gave back 13 assets to lenders due to uneconomic terms, and commenced preferred exchange offer to proactively address leverage and accrue dividends. And on quarter 1 2021 and quarter 4 2020, secured forbearance agreement on an additional $1.1 billion of loans, executed $172 million exchange around 30% outstanding of preferred equity into common stock at discount to par, executed ongoing 3A9 preferred exchange to reduce leverage and incur dividends, and ensured substantial liquidity via long-term capital agreement for up to $450 million, and signed equity line and CAA agreement for additional liquidity. Now that's a big part of paying off their mortgages, etc., because the pandemic has really killed the hospitality industry itself and hotels, etc., at least back in 2020. Not so much in some places in 2021 in the States, but still the effect still is prominent. We're going to go look into the 2021 details in a second as well after this one. So first off is some of the tasks and steps they've taken is competitive capital raise process, raised $450 million off liquidity, material reductive in monthly cash burn with significant liquidity runway, attractive debt maturity schedule, achieve substantive corporate deleveraging over the past 12 months, reduce go-forward long-term corporate leveraging target. And some of the next here things looking at is brand reach. They have 75 plus potential investor contacted, significant interest, 35 NDAs executed, serious engagement with 9 term sheets received, and a commitment letter signed in December for up to $450 million of liquidity with rapid closing only 21 days after signing the COM letter. And so they go ahead with a bit more with the terms of financing, including 16% interest with REIT PIK to 24 months and interest rate reduction to 14% after 24 months. And there's also $200 million additional funding borrower option for additional $250 million. And we're moving on a little bit. Estimated monthly cash utilization in thousands. So you're estimating in quarter 2 levels compared to quarter 4, you're diving from 37 million to 18.5 million, so massive reduction there, with an estimated months of liquidity of being around 29 months available months from quarter 4 2020. Note that the liquidity equals to $543 million, which includes cash plus equivalent plus available senior secured loans financing. Now keep in mind that $543 million is greater than an entire market cap at $251 million, almost double there. I'll refer to that later on as well. And another thing here is property mortgage financial maturity schedule. And you're seeing in 2021, you're looking into $98 million and $100 million in 2022. $135 million at 2023, and you start going into trouble around 2024. So currently, with the amount of cash they have, they'll be substantially met with these amount of these loans by 2023. And by 2025, you're looking into $2.6 billion. That's where things start getting a little bit shaky. Now, limited refinancing risks, including to the Hilton, Back Bay, Boston, and the Marriott Crystal Gateway in Arlington. Next, net debt plus preferred equity in thousands. You're looking into $3.9 billion. Now, you can say that that is probably what they're actually worth in the current estimates. You get to see again that the current market cap is sitting somewhere around $250 million. Now, the next thing here is well positioned to capitalize on lodging recovery, with lodging recovery expected over the next 4+ years. Best-in-class hotel brands and management companies, with Remington driving outperformance, with a chain scale mix with RevPAR growth expected, and a portfolio positioned to capture leisure and transient demand with low historical reliance upon group business, and they are well-diversified asset base across top 25 markets, may outperform and mitigate market concentration risk with a significant portfolio exposure to domestic migration trends. And we're going to move on here. You get to see their current estimates is that back to be pre-COVID, you're looking into 2023 and 2024. So in order to see if they're going to actually meet these kind of loan maturity schedules of 2024 and 2025, you need to look back into what they're estimating regarding pre-COVID sales and the kind of cash flow that they would have, and take a look of whether they can actually realistically pay off that debt on time or not. Now, the next thing we're looking at is a bit more details regarding the percent change upper scale room nightly supply. And you get to see in 2020, there has been a bit of a decline there compared to 2017 to 2019. And 2021 forecasted to 2025 forecasted, you're hovering just above 1%. Now, next thing here is they do have around 100 hotels with around 22,278 hotels rooms in 28 states. So currently they're looking into AHT of around 2%, Hyatt of 5%, Independent 6%, Hilton around 31%, and Marriott around 56%. They also manage property around 32% in Marriott, 58% in Remington, Interstate around 1% or less than that, Hyatt 4%, and Hilton around 6%. Now we're going to move on just a little bit further. You look into 2020 property labor cost as percent of revenue. So the industry was around 47%, 1600 BPS outperformance, and you're looking into a decline of percentage of gross operating profit. The industry itself was around 85%. They were around 78%. Not a massive difference. It's only 7%. So just don't get fooled with this chart. Now, the next thing we're looking into here is basically the looking forward for 2021 year-end outlook. And they're looking into a RevPAR change that's positive for luxury being 39.2, upper scale or upscale is 37.1, upscale is 20.6, independent 23.4, and the total of the US around 21.6%. And so the next thing we're looking into here as well is some of the other information regarding their migration bounds and how they would capture that. So not a lot of information, but they also go ahead later on in another PR about the clear path forward to capitalize on recovery. And so some of that includes, for instance, decisive actions to navigate global pandemic. The company secured forbearance on $3.6 billion on loans and exchanged 50% of its preferred equity for the common equity and ensured substantial liquidity via long-term capital agreement for up to $450 million. Next, significant balance sheet and liquidity enhancements. The company has materially reduced its monthly cash utilization, handed back uneconomic assets to lenders, and has significantly delivered its balance sheet, and has utilized equity line and SED facilities to generate additional liquidity and reduce leverage. Next is they're well positioned to recovery. The company has no significant debt maturity until 2024 and 2025. Assuming extensions are exercised, it has a geographically diverse portfolio with high exposure to transient leisure customers. Its affiliated property management, Remington, provides significant advantage to control property level costs. And so moving on as well from here, some of the forward-looking statements. So certain statements, assumptions in this current report goes on basically with the recovery of COVID and proceeding on without the limitations impact of COVID-19. And so the only thing I wanted to highlight here is a lot of these kind of assumptions are based on a full recovery. Now, some of the risks involved to this, for instance, is the sale or issuance of a common stock to Lincoln Park would cause dilution of the shares and the sales of shares of a common stock. And they also may require additional financing to sustain their operations, and it will not be without that they might not continue to operate. Next is their management team will have board discretion over the use of the net proceeds from their sales, and future sales and issuance of their common shares or other securities might result in significant dilution, with risk related to their business as well, including a financial crisis, economic slowdown, pandemic, etc., that might even push them towards bankruptcy. Now, the hotel industry is highly competitive, and the hotels in which we invest are subject to competition from other hotels for our guests. And the list goes on. And if you'd like to see more contents like this, make sure to scroll down below, click that like button, and if you'd like to join our Discord, you click to show more. You'll find it right here. It's totally free, and you can ask me more about questions regarding there, and there's no commitments. Now, another thing that you might want to do is click that subscribe button. It should be somewhere around here in the bottom right if you'd like to see more contents. Now, moving on a bit towards their forecast for 2021 coming up forward. And just a quick thing here is some of their key accomplishments in 2020. For instance, reduced payroll by $191 million versus an STR benchmark of 49.6, successfully secured non-traditional hotel businesses during the pandemic, including Hotel Indigo Atlanta, Georgia Tech University, approximately $500,000 revenue for the third and fourth quarter. Resident Inn, SeaWorld, Florida National Guard, approximately $500,000 in revenue. Hilton Nassau Bay, the Royal Dutch Shell, approximately $1.2 million in revenue. And the Marriott Research Triangle Park, including $1.3 million in revenue from the Durham County, and multiple California Marriott properties participated in the Department of General Services. And then the list goes on there. Multiple actual hotels participated for healthcare workers program, approximately $3.7 million. Revenue hotels buyouts were included in that. And the main thing for the 2021 anticipation here is this PR that we've received, or SEC filing. Ashford Hospitality Trust announced today its preliminary REV/PIR results for the first quarter of 2021. The company expects to report for all hotels in the portfolio decrease approximately by 51% and 62% for the first quarter of 2021 compared to the first quarter of 2020 and 2019 respectively. So this is still a big part of what they're seeing in terms of the drop. So you're looking into the drop way ago. So remember here was around negative 47%. So this actually still hurts quite a bit compared to quarter one 2020. And so you're looking into quarter 2020 being negative 47%. And from that, looks like quarter 1 2021 is worse, but that makes sense because really the pandemic didn't really start except on quarter 2 in 2020. So we'll cut them some slack there. And another thing here is their price over sales. It seems to be 0.49. The current SP 500 average is 307. Keep in mind this is 12 months trailing. So it's heavily undervalued when it comes to that. And in terms of the market cap, we did go multiple times on it, but just going on financials here and going on towards balance sheet and the total assets, you're looking around $3.7 billion in market and cash and assets equivalent, which really shows you when compared to an SP 500 of 454 price over book, this one might be heavily undervalued. Now, the big hesitancy in this one really goes towards if they can meet that quarter results by 2024 and 2025 to get enough cash flow to pay everything they need by that time. And so the question comes in here is how much cash are they making? And in terms of the income statement itself, you're looking into they're averaging 1.4, 1.5 gross revenue per year. And in terms of the net income itself, you're looking into that they usually do losses. So that's where things get a little bit interesting. How are they going to be able to raise that much money while they usually generally operate in a loss or in a very marginalized income in the negative millions and still make that 2024 and 2025 massive payments? So let's move on now towards technical analysis to see how the market has been reacting to this. Now, on the technical analysis point of view, you get to see on a 1 week perspective is that the 10 SMA is currently above the 30 EMA. That is a bullish indicator, and the MACD is attempting a positive reversal. Now, keep in mind, a lot of Discords and a lot of Twitter personalities ended up trying to mention that this is a buy for them and push the price a little bit further. So this is not really relating to news, but more relating towards a pump in that sense. And we're going to look into a little bit about their valuations, resistance and support levels, and a bit understanding about that momentum and whether this volume surge has a bit of strength to it. And in terms of momentum, you're seeing it's almost creeping up on the zero, which is a good thing from the negative side. Willing percent R is sitting somewhere closer towards the neutral level. Now, on a 1 day perspective, what we get to see here is that the 10 SMA is above the 30 EMA, and that is really bullish. And it's currently in this above the trading action zone where most positive reversal occur between 247 and 214. The 50 SMA line is at 287. It attempted to break it but got rejected. Above there, it's bullish. Now, the current momentum is 0.6, which is extremely bullish, and it looks like it was attempting a positive reversal on the 27th of April, and it really played really well into this positive reversal. However, it is currently overbought based on the willing percent R, which is similar to the RSI index. The current ADX shows that this might actually be a start of a trend. Now, the current moving averages, you're seeing a lot of people buying than selling, and volumes have been a little bit interesting. Now, the current moving average bands, where you start expecting this one to trade around, is 249 at the top, 227 in the middle, and 204 in the bottom, while the Bollinger bands is 292 in the top and 161 in the bottom. Now, the current stochastic fast and stochastic slow, you're seeing that this one here shows that there might be another leg up, but be very careful because it's already almost overextended with this push. But you get to see with this one, it is almost like cyclical. You get high pushes and then drops. And for this, you get to see on the Fibonacci retracements, significant resistance sits at 298, 404, 489, 574, 696, and 851. Now, on a price line action, we see a very strong current support sitting up at 251. Below there, you're looking into 226. Below there, you're looking into 193, and below there, 178, goes down to 147 and 131. Significant resistances, you're looking into a very strong one at 275. Above there, 304. Above there, 330. Above there, you're looking into 365, goes on to 391, 427, and goes to 455, and up to 539. Now keep in mind that it did a split 1 to 10 for 16 of July 2020. And a big part of this one here is a lot of investors aren't sure, even before before the pandemic. Yes, some people are saying this was $20 before the pandemic, but keep in mind, it traded $60 back in 2018. And a lot of these investors and big institutions were looking a little bit hesitant into this one and saying, hey, you're losing a lot of money while you have a lot of assets. Something's going wrong there. And it's whether perhaps the hospitality brand itself or the kind of way they operate that hospitality services might not be as profitable. And so that's why there's a lot of hesitancy onto this one. Even though the price over book and price over sales looks amazing, they have a cash flow problem. Even before COVID. What do you think about this ticker? Make sure to mention down in the comments below. Share, subscribe, and like, and have a wonderful day. Now, if you made it this far into the video, I do recommend that you go ahead and join our Discord server. There's a lot of amazing folks in here. We do a lot of discussions here into the trading floor throughout the day. A lot of people are in there, and we do ask questions. You can ask me any question you would like on there. We do post research and DDs, and we hold weekly chat sessions. And we also do have a lounge in there. So make sure to actually join that and join the fun there. Have a wonderful day and a good one.